When you speak to a client and he confides in you, he talks to you, you have to keep that in your stomach. India also has a pool of engineers and pool of smart people, just like Europe, to be able to design, to be able to innovate. You're going to see a flurry of tech internet IPOs again in the country. And there will be one more boom. It's not far away. It's somewhere in the next 2 years, where again, you will see number of companies that will go public and get listed.
Starting to roll? All camera rolling? Yeah. Rolling? Okay.
Vishal, I'm personally very excited to be talking to you. One, because when you're interviewing, then you want to interview someone who's not given many interviews. So one, that this is a sort of exclusive and it's a wonderful opportunity to talk to you. Second, that when we look at businesses in 2022, when I come from the startup tech and the new digital world, I've been tracking that space for the last 10-12 years, is JM Financials to me stands out. Because it's not an entity or financial services firm. To me, it symbolizes an institution.
As an institution, I think, India's transcended over time. And if you look at all of the great people and great businessmen in my dad's generation, right, they're all startup founders.
Yeah.
Right. In a sense, they may not be internet startup founders, but they're all startup founders.
Absolutely.
They build business from scratch, whether it's financial services, industrials, IT services. And they found their sort of path along the way. And, many businesses changed hands, many businesses expanded into different industries. And all of that happened through the 80s and 90s and, of course, the 2000s. But one thing was very clear is this sort of 60-plus generation, right? They were tough, right? They were very long-term oriented. They were very ambitious, right? And they worked extremely hard.
Yeah.
Right? And they wanted to make India proud. They wanted to make themselves proud. And they landed up, creating fantastic large institutions, which, India is going to be very proud of, is already proud of.
Yeah.
And will be even more proud of, going forward. And we've had a fair share of challenges from which we've learned. I mean, India has had governance issues.
Yes.
There is no hiding of that fact. But I think over time, we've overcome many of this. We've also had, a huge set of changes that we've seen in the regulatory environment, which has strengthened governance. Big kudos to SEBI over time, RBI over time.
Yeah.
And that has helped substantially in sort of figuring out which are the institutions that are built to last, and institutions which will not have the best practices and therefore fall off the cliff.
Today, as JM Financials, if I have to ask you, what are some of the levers or what are some of the things that has got you to build such a refined financial services institution from India?
One thing for sure is that the joint venture with Morgan Stanley helped us a lot. There's no two ways about it. We had a 10-year run with them. And that's where we, got to know and learned a lot of global best practices. I mean, they are a fantastic firm, right? And they were extremely well managed right from the start, and huge depth of management, seen many emerging markets, not just the developed markets, and that was a great learning. But if you see, if you see a typical founder's life, especially someone who builds a company into a conglomerate of businesses.
Yeah.
I think the earlier years are very focused only in one business. So if you see kind of, JM also, culturally JM is built as an investment bank, as a advisory company, which is focused on the Indian corporates and the Indian families. I mean, that is the culture of JM Financial. I mean, we turn 50 years next year, which is a big thing. And at least for the first, I would say, 25 years of our existence, the focus was really on advising companies and families, whether it was M&A, whether it was capital markets, both equity and debt. And after you create your brand, you really have to establish your brand in one business. And after that, you can transcend that brand across different areas of financial services. And that's what we did. So when we entered our JV with Morgan Stanley, we developed a bit of wealth management, a bit of retail broking. Morgan Stanley had bought a business called Dean Witter in the US. which was a large retail broker. They brought those expertise to us to try and build retail broking in India and fixed income trading. So we expanded on many of those businesses. And then post our split in 2008, we of course got into lending. And then we got into distressed assets, real estate, as well as corporate lending to add to what we already do.
Yeah.
So I think over time, it takes almost a decade to basically build your brand, even in a sub-segment in financial services.
What gets all these big houses who might be, not in the best of friendships with each other, everyone to trust you?
When you speak to a client and he confides in you, he talks to you, you have to keep that in your stomach. Right? It's a learning I learned from my father, right? So the one thing is you have to have a deep stomach. You have to make sure that when people speak to you, even if you're not mandated on a transaction, if people speak to you, then you should be able to keep things very secretive, right? Only to yourself. You don't even talk to family at home, right? And once you start doing that, I think this business circle, frankly, is a small circle, right? They figure out and they realize who they want to trust, who they don't want to trust. And that happens and your brand gets built. So, trust, as I learned that trust can be passed on in an organization naturally. But to maintain trust, is very, very difficult. And it only happens, when you train everybody in the organization, all the young new people coming in, whoever's joining our investment bank. I remember our chairman used to talk to every new joinee and explain this to him, that you should not even talk to anyone in the elevator about what you're doing.
Wow.
Yeah. So, it's really that culture that gets built over the years.
Before that, talk to you about India. The India that we are in today, and this year we completed 75 years of our independence. What's your view?
So I'm very bullish on India. Okay, extremely bullish on India, and many reasons why. Right. First, I think we have stability in the center. So if you go back in history, questions have always been asked about stability in politics. So firstly, we are pretty stable in the center, getting stable at the state levels. And there is enormous respect that our Prime Minister has earned globally, right? Which really matters a lot. Second, most of the decisions being taken by the government are in terms of policy.
Yeah.
They don't really favor anybody or anyone. It's really driven by policy and they want sectors to boom. They don't want a single corporate or single promoter to boom, right? Which is a big, big difference. So we have stability. We have long-term thinking from the government, right? The government wants to sort out our energy crisis problems, right? They want to invest, for example, in solar, wind, these sources of fuel and not really rely on crude, for example, right?
Yeah.
So you have stability, you have long-term thought process from the government. Second, you have an absolutely fantastic corporate sector which barely has any leverage. Right? And they have huge cash balances, very low leverage, and willing to invest, right? And linked to that, traditionally, exports weren't a very strong India story if you go back 10 or 15 years. Today, not only is the India market very large, but looking at China +1 and frankly, all of Europe +1, right? We have a huge export story. So India not only will be the services provider to the world, but India has that unique opportunity today to be the manufacturing sort of base of the world, ex-China, ex-Europe. And India not only has low-skilled labor, where China's become more expensive compared to India, India also has a pool of engineers and pool of smart people, just like Europe, to be able to design, to be able to innovate.
Absolutely.
So you put design, innovation, low-skilled labor, and a massive push in terms of energy sources and infrastructure in the country. There is no reason why we will not be a massive manufacturing sort of destination for the world. So the entire world is a market. And the corporations are ready because they are delevered. And they are, in a sense, people talk about, oh, last 7-8 years, Vishal, you say this, but, corporates haven't done CapEx. And my answer to most of these investors is that you're wrong, because India has had the most efficient CapEx of any country in the world. Why is that? Because 6 lakh crores of assets have been traded through NCLT, through the IBC process in India. All these 6 lakh crore assets have gone from inefficient hands to efficient hands. right? So this is not fresh capex, but in a sense, it's acquisitions which have led to brownfield expansions. And my bet is this 6 lakh crores is throwing more than 80,000 crores of cash flow. This 6 lakh crores has gone back to the banks, making the banking system stronger, right? Many banks are seeing write backs for many of the assets that they provided on. So in a sense, India has had very efficient capex because you've made sure your banking system gets the liquidity. Assets which could have been completely destroyed over time with wear and tear have been taken over by better managements. Not only have they seen a restructuring, they've seen a brownfield expansion, and those assets are producing cash flow and jobs have been produced. So actually India has seen capex, and now you will see greenfield capex of almost 2x the magnitude that you've seen in terms of IBC takeovers. So I think we're in a great story when it comes to our corporate sector. And third, you come down to the consumer sector, right? India consumer is barely levered, right? India consumer is today highly invested in terms of their savings, household savings, in real estate, which I think is roughly 50% of their savings, gold, which is another 15 to 20%, and bank deposits, which are another 15 to 20%, right? So you barely have 5 to 10%, right, in securities, equities or bonds, right? Which is nothing. Globally, that number is 1/3 to 50%. Right? So you're going to see a flurry of capital from Indian households, from the consumer, who barely have any leverage, have a high savings rate, right? A young population which is going to work, is going to create jobs, and is going to invest a huge portion of their incremental savings in financial instruments, which will power through the banking, the non-banking and capital market channels, corporates to be able to create more infrastructure. So in my view, India is like a 7-8% growth story for the next 20 years.
One thing that slightly worries is in terms of the job opportunities, because in the last 3 years, of course, we don't have an official number. And when it comes to women getting into the workforce, do you have any view on that?
Yeah, so interesting you say that, because we're in the midst of investing in a company. I can't disclose the name, but we're just focused on actually getting jobs for women. So that's a great space. So I think India has, of course, traditionally has had reasons why women have not been as active in the workspace. But I think with the internet revolution, right, with every single woman in this country being able to access the net, access what's happening globally with other women, I think this will change. The second big force is work from home. Taking care of your kids and being able to work has always been a sort of tearing decision for women in India, right? I mean, if you've seen your mother really focus on you, take care of you, it's simple, right? It's very hard for you to take a decision where you go to work and not devote time to your family, like you've seen your mom doing it. And I speak to a lot of women and friends who say this all the time, but I think work from home is going to make a huge difference, right? Because you can actually balance two, right? And I also think that Indian corporates need to be more flexible, right? So we have a board of I think 9, and we have two women. I think we'll add one more over time, right? So we're going to have 3 on 10. Why not 4 or 5 on 10? Maybe we get there at some point, but we're already 3 on 10.
Number.
Yeah, exactly. So we're already 2 on 10, getting to 3 on 10. And so I think things will change. I won't be too stressed about that.
Okay.
Over the next decade, say by 2030, things will look very different.
Vishal, I want to ask you about the Nbfc part of your business, and especially in context to lending. In the startup world, we've seen a lot of lending startups come in and get a good capital infusion also, but there is no clear story emerging, at least so far.
India's had a sea change in terms of transformation through the internet, right? The kind of penetration levels, whether it's Geo as well as all of the sort of other telcos that have provided 4G and now 5G networks to the country, has been game changing. Aadhaar has been game changing, right? So there was always this kind of bullishness that we could build deep lending businesses, right? And digitized, where we could reach consumers who don't have access to capital or the right sort of cost of capital and be able to service them. But lending is a very different business. Because in lending, the real sort of capability that you need to have is risk management.
Yeah.
Right? So having reach versus being able to effectively lend and manage risk are two different things. Second, Indian banks are very efficient. And over time, they become very efficient at both. You look at Indian private sector and even Indian PSU banks, right? Look at SBI. Phenomenal reach, huge amount of investments in tech, and they're putting it together and creating a unbelievable franchise. Same for ICICI Bank.
Yeah.
Same for HDFC Bank, right?
Yeah.
So these guys have the best risk management capability, fine-tuned over multiple crises over time.
Yeah.
Right? So their engines are sort of more learned, right? And they're using that with the reach that they have, whether it's branches or digital reach.
Yeah.
And so what's happening is many of the fintech lenders that you see, they're, in my view, they're actually extended arms for many of the larger banks and NBFCs to get customers into their fold, right? And they would be very efficient at the reach game. How efficient many of these will be at lending, time will prove. And therefore, in my view, RBI is taking the right corrective action today. Before some of these go and blow up in the future, they're kind of taking the right corrective action. So the regulator also will learn over time. This is a new space.
Yeah.
They will evolve. Lenders will make a few mistakes. Fintech will make a few mistakes. The regulator can make a few mistakes. But I think it's a learning opportunity for the entire sector. Whether the long-term opportunity exists or not, it definitely exists. Right?
Yeah.
Who will be successful, we'll know over time. So for us in our NBFC space, we started growing as a wholesale lender. So how did we start our lending business? We basically understood the corporate sector very well. We understood the capital market space really well, and we understood real estate really well. These are three spaces in investment banking. Through our various businesses, we could understand well. So we started lending in these spaces.
Okay.
So it was very simple. I know a promoter needs money. He needs to lever to put in some new capital for his new project. Let's find a way to help him with advice on the investment banking side to raise his debt capital resources, his bank capital resources, and an IPO, and also fund him for his requirements, for his contribution. Very, very simple, right? And that's how we started the corporate lending piece, and very closely the promoter lending piece jointly with it. And in real estate, so personally, me being a banker and having covered financial institutions early on in my career, I was very, keenly following HDFC, and I really liked their model. And I figured that there is a big scope in lending into real estate, and banks don't necessarily do it very well, or they're very risk averse. So we built a real estate lending piece, and from that we extended into home loans. So now we are a significant affordable home loans player. And the third piece obviously was a capital market lending piece, which comes to us naturally, where we provide margin trade financing, we provide ESOP lending and IPO funding and a host of other products to our retail investors and our HNI investors.
Okay.
Yeah.
Okay. When you said IPO lending, last 2 years have been about IPOs and
Yes.
startup, of course, IPOs, but startup IPOs. And we saw some big ones like Nika, and I think JM Financials was involved in that.
Yeah.
What do you have to say? Because again, they are right now, as we said, there is no clear verdict, but there is this thing that maybe we had a lot of hype.
Yeah. No, but that is true. So, I go back to my own career. So in 99, I remember I was an analyst working in the equity capital markets desk at Morgan Stanley in New York. And in 98, I'd finished my training program and I got into the job, and we just saw this whole boom of internet IPOs in the US.
Oh, yeah.
All of 99. And I remember in, I think around the end of Feb or first week of March of 2000, the market crashed. And the tech market crashed. Particularly, most of the IPOs that were sort of raised in the previous 18 months, they crashed to at least half of their IPO price, if not lower, right?
Yeah.
And they were all trading up to almost 3 or 4 times the IPO price. So I've seen this happen before, and I remember in the first week of March, I had no work. The month of March, I had no work. Literally, I would go to office, I'd be sitting around, and there was no deal, there was no transaction. Markets are very jittery, investors are very jittery. You see losses every day because stocks have traded off. So I think it's a cycle, right?
You know, you very early on saw
Yeah. I saw the whole crash.
The boom and the crash. Yeah.
And I saw it come back.
Yeah.
Right? So post 2003, it all came back, right?
Yeah.
So I think one has to figure out, importantly, that are the business models for real? And if the business models are for real, right, they will produce cash flow, right? Then it's all about valuation. And you will see euphoric times where you will see valuations go crazy and investors will get hurt. And that's exactly what you've seen. And it's also kind of exacerbated because you had a huge amount of liquidity in the world.
Yeah.
Interest rates were taken down because of COVID reasons, liquidity was pumped, and you saw crazy valuations in all sorts of companies, not only tech, and you've seen most of it coming crashing down. So I think it's timing. So, you know, people ask me, how do I model my investment banking business, right? Because it's highly cyclical. We've barely had any IPOs last 6 months. And I keep telling that I model my business peak to peak. I don't model my business Q on Q. It's not possible.
Yeah.
But if I look at the peak of the bull market to the next peak, have I been able to grow earnings 15 or 20%? If I have, I've been successful. Right? So you have to look at the same, when you have a new business which is not producing cash, disrupting, very smart founders, you know, they will see their ups and downs. But I feel genuinely that I think 70-80% of these business models are true. I mean, half of them are really, for lack of a better word, copied, right? But they'll be successful because you're seeing those business models work really well in the West.
Yeah.
So they'll do well. It's just a matter of time, right? Of course, some founders will go overboard. They may take leverage. They may make some wrong sort of acquisitions, or they may even not follow the right sort of accounting, right? And you will see some of those issues come up. But I think they will learn. See, I mean, just the way the older founders learned, as we spoke about, right?
Yeah.
You know, going through the governance crisis, going through a regulatory crisis.
But they didn't have that much of capital coming.
Yeah, true. But see, when you want to build a business to disrupt another business that's been in business for 3 or 4 decades, you need a ton of capital to do that.
Yeah.
Right?
Yeah.
Today, if you pick up your phone and talk to, say, a young guy, you know, who's 16 or 17 or 18, and or even younger, 12 or 13, you ask him what Amazon is. He's not going to say the river in Brazil. If you call me when I was 16 or 17 and you ask me what Amazon is, I'm going to say the river in Brazil, right? So,
yeah.
Amazon is a 25-year-old brand. It's not a very old brand, right? So, and it is a top 5 brands in the world.
Yeah.
So when you want to create a brand like this, you need a lot of capital. You need, you know, a huge amount of long-term sort of focus from your shareholder base. And you need that conviction. The shareholders need to have the conviction in that entrepreneur, in that startup founder, that, you know, he knows eventually where he wants to go.
Yeah.
And yes, there are some models which will burn a lot more capital than they should have, right? Whether it's done for competitive reasons or simply foolish reasons, you know, that one will see through, you know, in the next 3-4 years.
When is your next peak coming?
My next peak
to peak?
I think, well, hard to say. See, right now we're going through a liquidity tightening.
Yes.
Secondly, it's very difficult to say what will happen in Europe.
Yeah.
Right? I mean, there is a war,
Yeah.
and we have a leader in Russia who's not letting go, for right or wrong reasons. And so there is going to be a lot of disruption in the global economy. I mean, Europe, whatever said and done, is a big market.
Yeah.
It's a huge market. And if people are going to spend literally a huge part of their income for energy, that means they're not going to spend on a lot many more things.
Yeah.
Right? And if that's going to happen, growth is going to hurt globally. And India won't be spared. But I think that's a 3 to 6 month issue. What that will also propel is a lot more investment into renewables. And therefore, the reliance on crude will only go down if you take a 4 to 5 year view,
Yeah.
right? Which is very positive for India. Because India's single biggest risk factor is actually the price of crude.
Yes.
Right? So if that price goes down and India itself invests a lot in renewables, right? I think you're going to see a couple of peaks in the next 8 years, not one peak.
Okay.
Right? So I wouldn't be surprised if continuously for the next 8 years leading up to 2030, India is one of the best performing markets in the world. But will it be volatile? Like any other emerging market, we will see a volatility. But I think 2030, you'll see a massive peak.
JM Financials is known to work with traditionally corporate India, large businesses, and now you have an arm which is very closely working with new age businesses. But there's a lot of competition in that market. And it is a very volatile market, without being in the capital market. How do you, as JM Financials, look at engaging with these businesses? Is there anything different than the way you engage with large corporate family-owned businesses?
One is we will bring the strength of our entire firm.
Okay.
Right? To all of the startup businesses, startup founders, as well as the funds that invest in these companies. When I say we bring our entire strength, is we are just not a private equity or a venture capital fundraising house, right? We do debt, we do equity, we do private equity, we do M&A, we do financing on our balance sheet, right? So we'll bring all of our expertise to these startup founders, and I think they need it, right? As a bank, we've seen a lot of evolution in many businesses, and we've seen what can go wrong. And I think it's very important for many startup founders to have advisors who've seen history, and who can tell them what can go wrong and prepare for it. Right. So that's one big difference that we bring on the table. Second, frankly, I think from our standpoint, what's very different that we need to do with a startup sort of founder versus a traditional corporate client is we just need to have more agility. And the reason is I see the startup founders take very fast decisions, or because of the competitive intensity in their business, which is frankly a lot more than our business, right? They need to take faster decisions. It's not necessarily true for a larger, more established business. One is just the way they're structured, right? Secondly, they don't dilute very easily and don't have the influx of capital on which they need to take capital decisions. Right, so I think we need to be more agile and work with them faster on their needs, and which we are doing. So we're already a 10-member team in investment banking. If you look at our private equity funds, we're investing in a lot of sort of early stage companies. I wouldn't say startup level, first level, but I think a lot of Series B, C, D. We are consistently looking at a lot of investments on that side. So, and we're also financing debt, whether it's employee stock options or for startups to maintain their ownership. So I think across the firm, there is a big push to work with these founders.
So Vishal, I'll put you on a spot here. Because JM Financials, as we have already discussed and everyone listening would know, is an institution in itself, and you have so many things phenomenally going for you. When it comes to investment banking in the startups, and there are some brands who are known to be very, very aggressive and primarily do that. I want you to go on record tell us how bullish are you on the investment banking part?
No, I'm very bullish. So I think if you look at our business even today, and if you split apart, so we have the investment bank, we have a mortgage lending business, which is really real estate, whether it's wholesale or retail, and we have distress, and we of course have a platform AWS where we do asset management and wealth management. Even today, half our revenues are investment bank.
Oh,
wow. So, and last year we grew earnings at 31%, and the investment bank grew earnings at almost 40%. So we're very bullish, we are very focused, our brand is very strong. We could be late to the sort of new economy in a sense, but we're fine. I think it's sort of like the Empire Strikes Back.
Tell us about Nykaa. You were involved in the Nykaa.
So we're first investors in Nykaa, and I think Falguni's done a fabulous job. We were very delighted to be part of being invested with her and being an investment banker on the IPO.
That was one of the most outstanding IPOs that we saw in the early stage.
And it's held on above IPO price even now. I think it was nicely priced. And I think she left a lot of room on the table. I mean, she was not greedy, and she did not. She could have priced it even 20 or 30% higher then. And she chose not to. And frankly, she has investment banking background, right? She knows very well what happens if you overprice transactions. So that knowledge of understanding capital markets extremely well helped her a lot.
Yeah, yeah, and I'm sure partnering with you would also have been an interesting, journey.
Yeah.
Vishal, to a lot of entrepreneurs who would be watching, what would you say, because IPOs, are we going to see IPOs soon? How should companies look at planning? How should entrepreneurs look at planning, thinking, fundraising right now?
One thing, particularly for some of the Indian startups, and I'd like to give some candid feedback from investors. I was just in New York and I met almost 10, 12 investors. Same question coming up, as well as some of the local investors, is people want to understand the clarity of the business model in terms of when will these companies produce cash flow. Right? It's not very clear, but at some point in time, you need to be able to demonstrate that you will be a positive cash flow business. And I must tell you that many of the founders I speak to, they're very agile and they're very smart. So I think I'm going to be positively surprised, and so is the market, that a year or 2 years down the line, you're going to see many of these business models much more sharpened, much more efficient, and closer to a cash break even than what the street is estimating today.
Okay.
And when you see that happening, you're going to see a flurry of tech internet IPOs again in the country. And there will be one more boom. It's not far away. It's somewhere in the next 2 years, where again you will see a number of companies that will go public and get listed. Now, whether they get listed in India or they get listed internationally, I don't know. It depends on the model and how they're structured. But you will see Indian domicile names getting listed again. Yeah. It's only a matter of time.
But do you see large capital coming? SoftBank, Tiger, they both had the worst results, right?
The same thing happened in 2000. Tiger was one of the large investors. There was a fund called Janus, a large investor. And they saw a dip, but momentum came back, and markets came back. See, also it's hard to punish a blue-blooded firm like Tiger for 1 year, right? I mean, they have almost a 30-year track record. They probably have only had 3 or 4 down years. I'm not sure exactly, but not more than 3 or 4 down years in 30 years. So imagine a fund which has given you 26 years of positive performance versus 4 years of negative performance. So I think things will come back. Did funds get carried away in the last 2 years? Yes, they did. A few did. But what do you do if you have so much of money?
Yeah.
Right, coming into your funds and you have to invest it.
Yeah.
I think beyond a point, there's no choice. You are going to put it to work, and valuations will get euphoric, and that's cyclical, right?
Yeah.
So I think we're seeing that slowdown right now from that euphoria. It's just a matter of time, because see, fundamentally, if you look at, forget India, look at the world, right? Everything is moving at rapid speed digitally. It's very, very clear.
Yeah. It's not going to go back.
It's not going to go back. Yeah. I mean, everyone is just using, we order from Zomato 4 or 5 times a week, or Swiggy, one of them, right? It's just, I mean, the usage is only incremental. It's going up every month or every year, right? It's just easier.
Yeah.
So, why will valuations or large part of market cap not move to companies which are, generating more business? I mean, it has to happen. It's just a matter of time. Valuations may go up or down, but market cap over cycles will have to move towards those companies.
Do you see yourself investing in early stage companies? You have a private equity arm.
Yeah, we do invest in early stage companies, yeah.
And do you have a venture capital and
No, we don't have a venture capital or angel fund. We have a private equity fund. What we're doing in the venture capital space is pretty interesting. We want to sort of adopt a more fund of funds concept than really be a venture capital investor ourselves. And so we will work with at least 8 or 10 funds. We will provide them with capital, our advice and what we bring on the table. And we rather have small GP stakes with these funds and provide them with capital, and our wealth management will get them high net worth investors to invest in their funds and have a FOF strategy instead of really building, a venture capital fund ourselves.
Have you started that?
We've already started, yeah. So our head of wealth is working on the plan.
Oh. I want to understand, Vishal. One, I would love to interview your father.
Of course.
Because, the more I saw of him, the more I feel that what a self-made, humble, grounded value system story that he is. Today, do you get guidance from him?
Yeah, so he's told me, Vishal, I mean, he retired 7 years ago, and he told me that my door is always open for you. You know, you have to run it. Strategy, operations, everything is your responsibility, but you can come back to me whenever you want for advice. And I go to him very often, right? Because just that, you know, I'll tell you, I've met a lot of intelligent people in my life, right? But there is a big difference in people being intelligent, people being wise. Not every intelligent person is actually wise, right? Wisdom comes from a very high IQ and a very high EQ.
Yeah.
Right?
Yeah.
And I think my father, I can proudly say that he has a very high IQ and a very high EQ, and he's very wise.
Yeah.
Right? So having, you know, I've been lucky in having an advisor like him. I have an advisor in Mr. Vikram Pandit, who's the chairman of Nbfc, another extremely intelligent man who is very wise, right? Very high IQ, very high EQ, and the combination of that, you know,
is rare.
It's very rare, very rare. Let me tell you, I don't think more than 5 or 10% of intelligent men or women would probably be wise.
Yeah.
So that you know,
wise is hard earned also.
It's hard earned. It's a lot of gray hair, and it's a lot of sort of experiences. And as I said, a very good EQ, right? Being able to emotionally understand someone and relate to someone with intelligence, and over time with those experiences makes you very wise. So I talk to both these gentlemen a lot.
Yeah. Do you know, someone, I was listening, someone at the award function, I forget the name of the gentleman, said that I don't know if I can say anything, I can spill any secret about Mr. Kampani, but one thing that he's fundamentally a very good man, and he's a good man. You know, what does it mean to run a good business? And I'm talking today from governance, corporate governance, and building lasting good business, conscious business.
So I think one thing is clearly being more sort of transparent, right? So open door policy. So myself and, you know, Dad both, you know, we've any analyst or anyone can walk into our offices, right? We're a very transparent sort of structure. Anyone can talk to us about their issues, right? So transparency in an organization helps a lot. Right? Being open, being able to discuss what you really feel, what your problems are, right? That creates good culture and creates good business and eventually leads to good governance. Right? So I think one big factor is transparency. No one needs to hide anything, you know, in our company, right? I mean, everybody's very open about how they feel and what they feel.
Brilliantly put. Vishal, what motivates you?
No, I think frankly, at this stage, if you ask me, I think India doing really well, our country doing really well. And I think me in my own small way playing a part of it would actually motivate me the most.
Wow.
So my son, he went to college. I just dropped him. That's why I was in the US the last 10 days. And, you know, on one of my lunches or dinners with him before he left, I told him that, listen, you're going to have this fabulous education, right? And I studied in India. I went for my master's internationally, but, you know, you're going at a young age at 18. And you're going to learn from one of the best universities in the world. You're going to get trained. And he wants to be a CS major. And I said, you know, all of it is going to go to waste if you don't come back.
Wow.
And right, and make it glorious for India. Right. So for me, our journey is in really building a nation.
Wow.
Yeah.
Wow. Do you know, this gives me goosebumps. This is such an inspiring answer.
No, but it's true. I really feel it. Otherwise, there's no motivation. I mean,
otherwise, you
take a house in Alibag and just relax, right?
Yeah,
I mean, no,
that's what you can easily do that, right?
But that's not the motivation.
What anchors you as a person, as an individual, as a professional?
I think family, definitely. We're highly family oriented. I think outside of work, I spend most of my time with family. Also, close friends that I've made in my work journey. And many of them have been highly inspiring. Right? And having a value system which transcends through work, through life, as well as through friends. You know, having similar values, meeting people with similar values, when you discuss what your goals are, what your ambitions are, that really drives you. That really makes you feel that, okay, you're in the right direction. The journey is long, but you're working hard away at it.
Yeah. What has been your relationship with money?
Very transactional. Do I have a car? Do I have some cash? That's all.
What does purpose mean to you?
Purpose is not related to just one aspect of life, right?
Yeah.
So, frankly, I'm quite religious. So, I pray morning and evening, so that has a purpose. As I said, family has a purpose.
Since you've been doing it since very early?
Yeah, I think, my grandparents have been, my parents have been, so it's just something in our culture that, you take your shower in the morning and the first thing you do is pray 15, 20 minutes. Thank God for what you have and, what you're going to do, and, pray for the health and sort of happiness of your family and your loved ones. So I think that's what we do quite regularly, almost every day. And there's a sense of purpose in that. But I think the purpose, as I said, again, is related to, how do you basically value add as a person, as a leader, as a family member, and, how do you really, create glory for your country and your company as part of this long journey. I mean, that's really the purpose. On a personal basis, I think it's the same. It's working hard, and proving yourself. Yeah.
Wow. Wow. Yeah. Please continue proving, because you've already proved.
Yeah, there's a lot more to do.
Thank you so much. It was such a pleasure and genuinely very authentic conversation. So thank you so much, Vishal.
Thank you for taking the time.
Yeah.
Lovely chatting with you.
Yeah, thank you.
Thanks.